Jim Bass, Jim Bass Group and Real Estate Teams with your real estate market update. So Frederick County sales stats, median sales prices increased 2.2% year over year. It's amazing appreciation on top of all the exorbitant appreciation we saw during the pandemic over the last 4 to 5 years. Inventory is significantly increasing, 511 homes compared to a 5-year average of 359. So pretty good news for both buyers and sellers, still remaining slightly favoring the seller side in regards to days on market, about 2 to 3 weeks, still selling at 101% of list price to sales price. So still seeing over list price across the board. But overall, this really represents good news for both buyers and for sellers. So with this amount of inventory, buyers can make sure they're getting the right house. Days on market allows to make sure they're picking and not losing things overnight or crazy over appreciation as far as that's concerned. Budgeting purposes, we're at 101%. So they're basically paying list price across the board. So pretty good news overall for buyers. For sellers, I mean, what's not to love? We continue to appreciate limited days on the market. So the invasiveness of strangers rolling through your house is relatively wrapped up pretty quickly as far as that's concerned. And you can basically expect to sell for what you're listing. So we love that. Both sellers, buyers, and then Frederick County homeowners can benefit from the new breaking news that Money Magazine 2024, Life of 50 Best Places to Live in the United States, now gets to include Frederick County, Maryland, actually Frederick City, Maryland, as far as that's concerned. I'll have a link in the video here. It's a great watch. It's a great read. I'm also a little bit excited because there's a number of photos of the building that we built in 2007. So quite proud of that. It's a backdrop of a lot of amazing downtown Frederick and Carroll Creek, the Creekside Plaza building, which is pretty cool. And then last but not least for today's video, I want to debunk some mortgage myths, if you will, as far as both home buyers and homeowners misbelieve, if you will. So myth number one, you still need 20% down payment to buy a home. That's just actually not the case and hasn't been the case for decades. There are many loan programs out there. FHA only requires 3.5% down. VA, USDA is 0% down. And there are many conventional products nowadays that allow for a 3% down payment as far as that's concerned. Myth number two, your credit score has to be perfect. While a higher credit score can help you qualify for better rates, which is new in the last several years, many loan programs accept scores in the mid 500s to 600s, certainly government-backed loans as well. And then lenders will also consider many factors, not just credit score, based on income, debt ratio, employment history, things like that. So a lot of variables impact loan qualification. You're not limited on just credit score. Myth number three, renting is always cheaper than buying. And that couldn't be any further from the truth nowadays. In many instances, home ownership is actually less expensive than renting up front and during the entire tenure of your home owning. Appreciation is an added bonus. Homes are continuing to rise. We saw the stats today, continuing 2.2% appreciation. So huge advocate on home ownership. Congress is working on continued bills. Home ownership write-offs are still one of the major portfolios that you want to keep in your entire portfolio as far as that's concerned. Myth number four, you should always choose a loan with the lowest interest rate. Now, while lowest interest rates can be the best deal, that's not necessarily the only factor. There's points involved with a lot of loan products. You can do 2-1 buy downs. There's closing cost considerations, things like that. So fixed rates, adjustable rates, depending upon the tenure, the time you expect to be in the house. Rates will again drop someday, and I think refinances will be on the board. So you want to look at a menu of opportunities or options for you to make sure you're getting the best product. Myth number 5 or 6, I've lost count, is that you can't buy a home if you're self-employed. And again, that couldn't be any further than the truth. I've been self-employed almost my entire life. qualify for a number of mortgages, you can too. Myth number 7 or 8, you can't get a mortgage with student loan debt. Now, while student loan debt had been paused for a long time, unfortunately, we all got to pay our due. So student loans are being captured again and have to start being collecting, but that's just one of many considerations during your loan approval process. Income to debt ratio, it just shows up as another debt as far as that's concerned. And the last, and but not least, mortgage myth is you should pay off all debt before applying for a mortgage. Again, could not be further than the truth. Paying off debt, carrying some debt shows how to build credit, shows a good credit history as far as that's concerned. Cash reserves are a nice benefit. So if you wipe out all your reserves paying off debt, doesn't always work in your best favor. So again, before you flounder out there or check something off, give us a call. I work with some of the best lenders in the nation. I've been a real estate lender coach for almost 20 some years, been in the business 34 years. So Jim Bass Group, real estate teams, give us a call if you have any questions about what your potential next steps could or should be as far as that's concerned.